Hello and welcome to your weekly installment of GoNoGo Charts. My name is Tyler Wood and I am joined here today with Alex Cole. How you doing, my friend?
I'm doing very well, thanks. How are you?
I'm doing great. Thursday, January 26th, still a blizzard, upstate New York. Difficult drive home in the snow last night, but happy to be back from a quick trip to New York City with the CMT Association. So let's
Absolutely.
dive in. Let's dive into our cross-asset heat map, looking at the trends from the top level down, Alex.
Yeah, for sure. And you can see that we've got the go trend in equities trying to get established. It's been about a week or so now since we've saw those first aqua bars, and we're now in strong blue bars. So that's good to see it persisting like that.
Mm-hmm.
Treasury bond prices also in a go trend, but painting weaker aqua bars. And of course, then the unchanging two panels at the bottom now for a few weeks, the commodities in a strong go trend, and the dollar, of course, continuing to struggle.
Absolutely. Interesting to see those commodity names coming back. And we're going to get to some individual equities here in just a little bit. But as we always do, let's check in on those macro forces that are driving trends, starting with the TNX, the 10-year Treasury yield, which has been shown us a little more volatility of late in the bond markets.
Yeah, and you can see that generally speaking, we're still in that downtrend. We're making lower highs and lower lows. The no-go trend colors are prevailing, generally speaking. And you can see that we just edged lower about a week ago, but now have come back above those levels. And what's interesting for us as GoNoGo Charts followers is that the oscillator has risen from below to test the zero line. So we're going to see now, will this be resistance? Will it get rejected at this level? In which case, we are likely to see an attempt by price to set a new low, because we'd be saying if the oscillator moves back into negative territory, that we'd be able to say that momentum is on the side of the no-go trend. So we'd be able to suggest some moves lower for Treasury rates. Of course, if the oscillator breaks above zero into positive territory, that would be a concern for the no-go trend.
Absolutely. Again, rates moving inversely to bond prices. We're seeing sovereign bond buying and certainly some risk off behavior in the fixed income markets, broadly speaking. But we like to see those rates continuing to stabilize and certainly not ripping higher, which is a real tailwind for equities and other risk investments. Alex, let's take a look at the U.S. dollar index. We like to check out UUP just as an ETF proxy for the U.S. dollar index, continuing to fall in that strong no-go trend color.
Yeah, we really haven't seen much to get excited about if you're a dollar bull for several weeks now. Of course, it blipped above positive territory on the oscillator here, but quickly followed by a strong bar that brought prices back down. And then we've been making lower lows really throughout this period. And you can see now strong no-go bars, very little volatility, small price movements, and the oscillator in negative territory, but not oversold. So just generally speaking, a bearish picture for the dollar.
Absolutely. And broadly speaking, let's pull up the U.S. commodities index. We'll circle back to gold here in just a second and check out precious metals here in today's GoNoGo show. But from the trend perspective, let's bump that out to a weekly on the U.S. commodities index.
Yeah. This has been really interesting to follow. It's a very similar picture to U.S. oil. It's really consolidated mostly sideways for a long time, right? So pretty much since it hit highs in the beginning of the year in the spring, we've seen sideways movement, not the biggest correction against the trend, but some sort of consolidation sideways. And that's really caused GoNoGo trend to struggle to find direction, right? There's a lot of choppiness, a lot of uncertainty in the markets, and we see this mix of colors coming into the indicator. So that tells us that a lot of uncertainty in terms of whether the trend in commodities is going to continue to the upside long term, or if it's going to struggle. And we can see that played out again by the oscillator as it finds a little bit of trouble around the zero line, trying to decide, is it finding support at zero? It breaks down below it slightly, then back above, multiple squeezes happening. Mostly, I would say we're seeing support now at zero. So we've got a fresh go trend, some trend continuation. Let's see what happens here, but a lot of sideways movement.
You know what's powerful about technical analysis is that we can use multiple time frames to understand broader context. Obviously, we're not day trading the commodity index in very short time frames, but where it was looking extremely sloppy and choppy, maybe as bad as the roads that I was on last night. What we can do when we zoom out is understand that that's this range bound sort of stabilization process. The price range has narrowed and compressed at the same time that we're seeing the GoNoGo squeeze volatility indicator continue to climb up to that max point in the grid. And so what we're seeing is that tug of war really looking for direction in the commodities index. Alex, if you wouldn't mind, let's move this out to a monthly view just so we can see a very long-term historical position coming up towards an area that could be resistance, basically at the inception of the commodities index here. But what we're looking at right now is perhaps even the beginning or early innings of what could become a secular trend, and we've got that decades-long downtrend as a lot of pension funds and sovereign funds were unwinding exposure to real assets and alternatives after just being crushed in balanced portfolios in the great financial crisis. So what we're seeing now is that that reallocation and some institutional investor interest in commodities as a investment in a piece of their portfolios.
Yeah, and it's all perspective because this is a couple of years into what could be a larger trend, and if you forget what time frame or what periodicity we're looking at, this looks like every other chart that's showing some sort of bull flag, right? So you've got a trend identified, strong rally into a high, pull back against it. If we find support here, you could go again, to a high that is equal to the run into this small pattern here. So it could be a very, very long trend. We'll have to wait and see as long as it finds support here. But you keep things in perspective, look at the charts as you zoom out, like you said, you can really start to see what's happening from a broader time frame.
Absolutely. All right, let's check in on our gold bugs. Starting with that daily chart, for those who have picked up on the last few weeks, we've been covering what has been that long-awaited move in gold. Certainly nobody's friend during a time when everyone was expecting the safe haven asset. Gold really underperformed, but is set up quite nicely. Alex, we can talk about this daily, or we could jump out to those longer time frames too to see what upside targets we want to perhaps consider for gold.
Yeah, and you can see how, like we saw on the last chart, how we are coming up against some highs that have been a problem in the past. Now, there's definitely some room before we hit these highs, but you can see these. This is the beauty of technical analysis. The chart, these two highs are almost exactly the same. That's amazing. That's several years apart, but that is a very, very strong level that will act as resistance, you'd think, going forward. Now, we've got some room before we get there, and you can see how we've just entered this go trend. But that's very interesting that these two highs are there at such important levels.
Absolutely. All right, let's take a look at the S&P 500. We talked about equities being back in a go trend on the daily time frame as we were looking at that cross asset heat map. We've seen some of the other markets and how these are going to affect equities. But what I want to start with is a weekly chart of the S&P 500. We've had repeated moves into a go trend on a daily time frame. But what Alex and I have been watching all through the last year and that bear market move to the downside was that relief rallies are just that until proven otherwise. And so when we zoom out to a longer time frame, we can understand what is a reversion back to a downward sloping trend line, or what is actually meaningful moves to the upside.
Yeah.
So Alex, let's do a little analysis on this weekly chart first. What's jumping off the page to you?
Well, I mean, it couldn't be more critical. It's absolutely an inflection point that we're going to be watching, and people are going to be watching. As you said, until now, all of these rallies on a daily chart have really been relief rallies in a larger downtrend, and you can see how we've been brought back to this trend line a couple of times. Now, what's interesting or different this time is quite clearly we've got bullish divergence between the oscillator and price making a lower low, oscillator making a higher low. It looks to me that this now is a new higher low, an intermediate higher high. We didn't get back down to the lows that we were typically getting to on each move down. And now GoNoGo trend hasn't painted a strong no-go bar in several weeks. And we see a string of amber go fish bars showing uncertainty. If you look also down to the oscillator, you can see that we're at the zero line and we're technically finding support at that level. So we're right about at a level where we would either be turned away again or starting to think of this as a more constructive move higher. We'd see go bars creeping in. Price might be making a higher high than it made here. That would be the first one in since the beginning of 2022. And so it's a very, very important point. Nothing definitive right now, but definitely different than, let's say, in the summer of last year.
Absolutely. Now, quick pointer to everyone who is a GoNoGo Charts user on their StockCharts ACP platform. You can grab this as a plugin to your StockCharts if you wanted to use these tools. The important point to know about GoNoGo Charts is that bars are never restated. The colors do not change after the fact. But while we are in the period that's currently being painted, it's in play. So here we are midday on Thursday, January 26th. That weekly bar that is currently picking up over the trend line could in fact end the week, depending on how trading goes tomorrow, perhaps even with a color change, or close significantly above that trend line. So when we're looking at longer term charts, we just have to understand that in volatile markets, that trend calculation can change during the course of the bar being painted. Absolutely. Once the period closes, it's never restated. So it's a very interesting inflection point to consider. And while we're in a neutral territory, all of the blended technical trend following indicators that are happening in the background are in their neutral level. So what we can assess from a neutral trend is that there is a time to go long and a time to go short and a time to wait for the market to really decide. But that's where we turn to the GoNoGo oscillator in the bottom panel that Alex was pointing out, which is continually finding support at that zero level, breaking out of those squeezes to the upside. So we're certainly seeing some buying pressure and more control from the bulls. All right, Alex, the S&P 500 is at a fascinating spot, but let's get under the hood. Let's take a look at our GoNoGo sector Relmap that takes each of the S&P sector ETFs relative to the benchmark. So it's just a simple ratio chart, but we're looking at those trend conditions to understand where we're seeing relative outperformance or underperformance. And I got to say, those ultra defensive sectors, consumer staples, healthcare, and utilities, really leading to the downside, underperforming this rising market, which is an interesting sign for investors' risk appetite.
Certainly, we're seeing change. This is the point of this map, is you can watch change happen before your eyes. And so we are certainly now seeing a shift. We saw, you can see this large area of blue here where defense was on the field. And then you saw the top part of the map underperforming in no-go colors. Well, that has certainly changed now. Like you said, this is healthcare, staples, and utilities in strong no-go trends relative to the market. And look what's happening at the top here in our growth sectors: technology, discretionary joining communications in relative go trends. So there's a definite change, a definite shift in investor behavior. And what that means for equity's ability to stay in a go trend, we'll see.
Absolutely. Now we do a lot of screening and scanning and bottom up work as well at GoNoGo Charts, and we like to rip through quite a few charts, look at a number of names each week on this show. Alex, let's rapid fire. Let's talk a little bit about cruise lines, casinos, and luxury goods. Which are surprising, right? If anybody's been watching financial news media, you're hearing a whole lot more about recession-proof planning than you are thinking about discretionary spending. But let's start with a chart of Wynn, Wynn, Wynn Las Vegas resorts. What a powerful up move.
Yeah, and you can see the trend doing what we expect when a trend is strong, making a series of higher highs and higher lows. What we like to see from a go-no-go perspective is that every time there's some correction against the trend, we see that weakness with the aqua colors, but then we find continuation as the oscillator finds support at zero, and then the darker, stronger blue colors come back. So you can see here a couple of opportunities to buy the pullbacks, to buy the dip. Right? That's the goal. When a trend is strong, we want to be buying the dips. And this is a way to automate that process in a way. You could look for bull flags, you could look for pennants, you could look for whatever patterns you'd like. But we know that when the oscillator moves back into positive territory, when a go trend is in place, that tells us that there's resurgent momentum in the direction of the trend. So that is what triggers continuation icons for us on the chart. So right now, a very strong move. We're seeing now the other indication from our oscillator and its interaction with the trend, in that we're seeing some counter trend correction arrows, just telling us that we've moved very quickly in this direction. We may see some consolidation or some slight correction against the trend. And that's what happens as the oscillator moves back towards its zero line. So we've had a real turnaround today. Great move. We also talked to a lot of people, and we know that buying into strength is what works, right? So we've actually taken out these highs that came from the overbought nature of the oscillator, and we're really back up there again. So a very strong bar today. It looks like we might be setting another higher high.
You know, talking about that phrase "buy the dip," I think there's a moment here right now for a lot of new investors or even seasoned individuals that got caught up in the fervor of buy the dip mentality in 2020 and 2021. And what we are talking about is not the blind, you know, if something's rolling over, we want to step out in front of that train. What we're talking about is a scientific or quantifiable approach to finding that intersection of a security that's already trending in an uptrend, in a go trend, and then seeing that momentum resurgence, right? So as disciplined investors, we want to keep our rules as simple as possible so that we can follow them in a disciplined way. And what Alex is pointing out with those icons is just the quintessential. This is a textbook GoNoGo chart for any trend follower. What we're looking for is to stay with the trend through the meat of the move. And no one knows, we can't predict the future about whether that first rollover is simply a consolidation, a contracting period in an otherwise moving uptrend, or if that's the beginning of something worse. So we need to use these objective tools to make sure that we are responsibly managing risk and getting out when that trend ends, but having an objective view about where we can press our bets and stay with things that are working. So yeah, great chart to look at. Let's move away from the casinos. Let's pull up a chart of Royal Caribbean, RCL. I never thought cruise lines would make it out of the pandemic disaster alive, but we're back in fresh go trends. What's telling about this chart for you, Alex?
Just that we've taken out these highs from the end of the year, right? That's always going to be a positive. We saw a period of go fish bars as the price tried to do just that, and then it was able to do so. So if we can see price consolidate at or above these levels, I think that this will be a level of support going forward. And we see strong go bars, and we see the oscillator in positive territory. It's interesting because I've spoken to a lot of people who are, you know, itching to get back on cruises. And like you, I wasn't sure that would happen, or at least not relatively quickly.
Getting itchy on a cruise. I don't know if that's a great advertisement for Royal Caribbean, but let's move to the airline industry, which is also outperforming on both a relative and an absolute basis. We could pull up American Airlines or UAL, whichever one you would like.
Yeah, either or. American Airlines, I like the look of this because we've got this built-in support from the gap. We saw as it was sort of moving sideways and struggling to make up its mind, we saw the oscillator cleanly break above zero on heavy volume. Remember, when the oscillator changes to a dark blue, that means volume's heavier than its average. So then that was followed by a go trend. That gap higher now has given us some support. So as the new high was hit and price pulls back, which is very, very typical, we see some aqua bars showing us that weakness after the counter trend correction arrow. But now we look to the oscillator. It's riding zero. There's a squeeze building, and we're going to watch to see if it finds support. If it breaks out of a squeeze, any kind of squeeze, but especially if this gets extended and it breaks back out into positive territory, then we'd expect an attack on these prior highs, because again, we'd be saying momentum is back in the direction of the go trend as long as this support holds. And you can see how on an intraday basis today, we moved lower, but we are higher now as of about 2 o'clock in the afternoon. You can definitely see that we're back above that level of support.
Absolutely. Sticking with this industrials themes and airlines, let's pull up a chart of Boeing, BA, and another outperformer from a sector that has been showing relative strength, not just recently, but perhaps even solidifying its role in new leadership for what could be the next bull market.
Yeah, you definitely can see how this was a leader, the Go trend happening much earlier and giving us lots of higher highs and higher lows and lots of opportunities to participate as the oscillator found support and we saw trend continuation. And where are we now? Well, we're at the same sort of point. We've moved sideways or slightly corrected against this high and the oscillator back at zero. So we'll watch the zero line, of course. And if we break back into positive territory out of the squeeze, then we know that this perhaps is a relatively low risk opportunity to participate in any further moves higher.
Absolutely. Another outperformer within some leading sectors. Let's check in on the financials and a chart of Marketaxess Holdings, MKTX, as a potential way to express a thesis for financials as an outperformer.
Yeah, and we've been talking about XLF in our sector map as being an outperformer for some time. So this could have been a nice play to go down to a security level and look for outperformance within the sector, right? You can do relative strength at every level. We've been seeing some strength from XLF to the S&P, and then you look in the securities within that sector and see what's outperforming relative to the sector. And you can see how we've got several max squeeze breaks here on the chart, each one offering an opportunity to get into the trend before it hits new highs. Right now, I mean, yesterday, what a bar that was. So, we have to see what happens here, but we seem to be holding above the close of yesterday. So very interesting there.
Absolutely. Sector allocation is very important, but for those who are running more concentrated portfolios, you're going to find winners and losers, leaders and laggards in every sector. And so using that simple ratio chart and some relative strength maps that Alex and I look at, you can start to pull in those outperformers of the outperforming sectors. A great way to beat the benchmark. There are so many other names on the list. I want to move real quickly. Luxury goods, Alex, kind of surprising in a perhaps recessionary postured environment. Let's pull up Coach, Kate Spade. That's TPR. Tapestry is the parent company. And then love to take a look at Louis Vuitton as well.
Yeah, so like you said, this possible recession, who's it really hitting? You can see how luxury goods are in a go trend and making high highs and higher lows. We're maybe at a bit of a peak and in sort of an intermediate peak, seeing some counter trend correction arrows coming in, suggesting that price may consolidate slightly in the short term, but a very, very nice looking go trend for Tapestry.
Absolutely. And Louis Vuitton, LVMUY, another real outperformer in that consumer discretionary luxury goods category.
Yeah, I mean, look at this one. Again, GoNoGo trend continuation icons offering those opportunities within trend to sort of buy the dip, but in a scientific fashion. And right now we are at new highs and we're seeing some counter trend correction arrows creeping in. We'll watch to see if we get another opportunity to participate in the trend as the oscillator approaches zero.
But nearly consistent heavy volume through this entire first month of the year, and that big leg higher. Fascinating to see. Speaking of frivolous spending, Alex, let's check in on Bitcoin, the cryptocurrency that without a whole lot of pomp and circumstance is coming back in strong go bars. What does this chart tell you about where we're at for?
Well, we had so many significant areas that were support and resistance on the way down, and I remember when we saw this go here, we thought, okay, well, we've got to get above this high, and it took it out in like one bar. And then we're looking across the chart saying, okay, well, there's a lot of possible resistance here. Took it out again in one bar. Did consolidate at these levels. Lots of buyers and sellers at these levels. But, fairly easily took that out as well. So this has been a sharp move over the last sort of 2 or 3 weeks in Bitcoin. And I think again, we don't like to have too many opinions, but it does seem as if this move of Bitcoin from 17,000 up to over 23,000 has happened without a whole lot of overexcitement. So
Mhm.
what
Mhm.
that means for the cryptocurrency, we'll see.
I think it's just a universal evergreen lesson about the value of technical analysis. I don't understand exactly how the blockchain is going to change the world that we live in, and I couldn't tell you why Louis Vuitton bags cost so darn much. But we're not fundamental investors. We can understand using our toolkit on any asset, and come up with ways to participate in trends, which I think is really a testament to the benefit of this toolkit. Not GoNoGo Charts, technical analysis broadly presents investors with a way to participate in things, even if we don't have deep subject matter knowledge about the industry or the group or the products that they are offering. Alex, I know we are out of time already, but it's great to be back here on the weekly Go No Go show. If you're watching this on YouTube, thanks so much for being a part of the StockCharts TV community. You can also check out Go No Go Charts online at GoNoGoCharts.com or YouTube or Twitter or everywhere else. For all of us here, we wish you to safe travels if you're on all those airlines here in the snowy months of January, and we look forward to seeing you again next Thursday at 3:30 p.m. Eastern here on the weekly Go No Go show. Be well.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.